Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Friday, December 13. The year's 2024. Let's talk trading. It's time for the weekly wrap-up on Friday the 13th. These videos are for educational purposes only. Your results may differ from mine. And a friendly reminder about risk management. Never lose more than you're willing to lose on any one single trade. So let's get with it here on the charts. We can see the pound is at 126.14, 115 pips below that weekly open, 185 off the high, and 7 off the low. So obviously we're in the rat zone. And taking a look at the dashboard, all the weekly open gaps have filled. Now, looks like we're below the opening range for the month, and we're close to the low of the opening range for the year. And we are 95 pips below that yearly open. 817, 818 off the high, 317 off the low. And inside bar action, we are below the monthly inside bar low that happened 11 months ago. We are inside the weekly inside bar that happened 37 weeks ago, and we are way below by 107 pips below the inside bar low that happened 3 days ago. So once again, these inside bar trades, simple horizontal lines that don't move much. When we get a new inside bar, they might change. They usually change on a new inside bar, but on the higher time frames, we don't get that much movement. Looking at the range here in the dashboard for the pound, 71 pips. We definitely have a lot of movement in the yen pairs again. And let's see, the beast, the pound yen, is clocking in at 160, but the euro yen is clocking in at 192. So definite moves on those yen pairs. In fact, I've been trading dollar yen along with the pound dollar, and it's been proving to be profitable. Buy zone. We fell out of the buy zone on the pound a couple hours ago. You can see where we are here. Once again, bouncing off of that low. And you can see it's time for the green rats to feast. So let's see if we can get a feast going here for the green rats. Range 71, so the range is large enough. And we might get a M15 and possible M30 cover. Now, Bambino Flex indicator said to be short, and you can see here at yesterday's low, we broke out of yesterday's low, and we haven't closed above it yet since that break, at least not on the H4. We got a huge H4 this time. And I was trading with Walmart earlier, and we were short up around the 60 area, 50 area, and should have held on to those shorts. I said, I wonder if it's going to cover the H4, the previous H4, and it more than covered the previous H4. And we're below S1, we're away from S2, so bias at S1 is long, and that's up at 2630. We missed today's pivot by a bunch, 30 pips. First missed pivot of the month so far. For the week, we've taken it out, and for the month, we've taken out those pivots. Whoops, what happened there? As you can see here, that lower wick zone in and out, it was just pushing that price way down. For the week, 193 on the range so far, but it's possible we push that. We're right at the 33 percentile over the last 12 weeks. You can see last week was 194, so we're only 3 pips short of that. We did not break out at a high. We broke out at a previous week's low by 9 pips. High minus close 185, close minus low 6 for you rats. For you weekly open crossover traders, high minus open was 70, open minus low was 121. So there was definitely opportunity there to take profit. Looking at the simple price action chart here, we've had 1, 2, 3, 4 M30s in a row that have not covered, so it's about time we cover one of them, I would think. Let's see what happens. Higher low, lower high. You see we had a trigger at 11. That's paying off by about 4, almost 5 pips. If you're not greedy, these definitely work. And just one thing, if you are trading this, you have to remember when you look at a 3-ball, and that's when, so you look at this. Now this higher low, it looks like it was profitable, but the thing is, that's not where you would have taken that higher low. It would have been up here. But since we're only looking back 34 bars on that higher low, it's going to show it here. But that wasn't the trade. The trade was way up here because the 3-ball set to 34. So that's why we look back 34. So I just thought I should point that out in case anybody was wondering or was confused, didn't understand. And let's see, I guess now we can start to look at price travel wick zone, something that I've been working on, and I think it might be ready to fly. It definitely has some merit. And like I said, if you look at the market structure, traders, right here you would have a order block, as they call it, that last bear candle before price goes bullish here. So they would call this area an order block. But I'm looking at the price turn wick zones because usually there's a lot of these big range bars or return bars. And if you're wondering, is there a difference between a big range bar and a return bar? No, not really. It's just with the return bars, you look at the most recent. Big range bars, you look at them all. And here for the month, we have 203 pips of range, so we know that should probably increase. And so we haven't pushed the range for the year. So there's really nothing else much to tell on these charts here. But I will put it up just in case you're tuning in. So you see we haven't pushed the year-to-date accumulated range since September. And let's just take a quick look at the ATR percent right now, where we're at. We're at 52%. So hopefully that will increase. Notice prices moving up almost to that 125 area. And I'm kicking myself. I should have put my TP at 25, not 20. But when I make videos and I'm in trades, I rather just get out as soon as I can. and not take my chances. But yes, I am kicking myself. Okay, we're still below the yearly open here. So if you put that trade on at the beginning of the year, you'd be down 0.66%. That's why you have to take profit when you can. And that's why I put that at 20, just in case you decided to go back the other way. But like I said, when I'm not managing trades live, I like to put those TPs on and just go with it. Now, let's just take a quick look at the week here. We're below that weekly open inside the lower wick zone now. Sellers strong control. We crossed below the previous mid and the previous pivot, and we've got a lower high, lower low. So something to think about for next week. And as you can see, we covered, and I called that earlier to play for the cover, but I didn't. And had I really if I left those trades open, I'd be up a boatload of pips. Oh, but you know what? You can't look back. And the one thing, it's real funny how I'll bring up a topic, it seems like, and then all of a sudden I'll see some of these other traders that I subscribe to their weekly or regular recurring emails just to see what they're talking about. And sometimes it's good to hear the same thing from somebody else. And the one I got today, they were talking about being consistent and just doing one thing and keeping it simple. In fact, I forwarded that email to Walmart. I said, "Does that sound like somebody's But you have to laugh sometimes because out here, it's not that I consider myself giving advice. I'm just sharing, my experiences, my work in terms of indicators and methods. And, hopefully maybe I pass on something that helps a fellow trader out. But, I think Walmart and I have talked about it before, and it's like psychological. It's like, why do we break our own rules? I mean, why is that? Why can't we stick to our own rules? I mean, today I was in a pound trade. I got in, I didn't take my 1 pip, and then it went against me, so I averaged in, and once again I had a chance to take 1 pip. And my rule, I think I might even mention this week, is if I add in, then I need to just get out, break even or take the pip. And like a dummy, I didn't. And then price slammed against me by about 10 pips. So of course I averaged in a couple of more times, just because breaking other rules, trading long on a red M30 in full disclosure, because I quote unquote knew it was coming back, and sure enough it did. And had I left things alone, I think my average in was somewhere around 19 or something. I would have been up. I could have made 10 pips on a boatload of lots. Anyway, that's okay. And in fact, Walmart, he had called the price to come down here and hit 41, and he had gotten out of the trade, and sure enough, it hit 41. He's like, I knew where it was going. I knew exactly where it was going. Why did I get out? And we just laugh at ourselves because, we're human. Somebody goes, well, just write an EA. You're a coder. Doesn't really work that way. If it did, I'd own the market. The market would cease to exist. That's just not the way it works. So what you have to do is find something that works well for you. And for me, it's taking 1 or 2 pips. And if that thing isn't running, just get out of the trade. So, fellow traders, I hope you have a fun and safe weekend. Santa Claus will be coming in a couple of weeks. I hope you get all the presents you want, even though Christmas isn't about presents. And if you celebrate something else, well, happy holidays to you. Even though I was telling people yesterday, I think it's too early to say Merry Christmas. I think next week, somewhere around the 18th, 7 days before, then it's okay. Or actually, maybe even the week of. I don't know why everybody wants to be early, but it's not what you trade, it's how you trade it. So go out there and drain the banks.